Hey guys, we're back with another ETF overview video. Today we are looking at the ProShares S&P MidCap 400 dividend ETF. This thing has massive dividend growth, the largest I've seen of any ETF, and I don't know if we're going to find one with better dividend growth rate than this one. We did last video or last ETF review, we looked at Noble, which is also by ProShares. So we're going to compare that and see how well it has done. But we're going to go over an overview of this. This ticker symbol is REGL, R-E-G-L. And we're going to take a look at expense ratios, portfolio comp, what qualifies for the index, performance, dividend growth, all that. So if you missed any of the other videos, down below is a playlist of them. I was going down by assets under management. Now I'm just going to pick and choose and find some that you may find interesting. They're all not going to be winners, but I think some are going to be popular for different reasons, right? So let's just go over this real quick. So REGL, REGL, to be included in this index, they have to be a member of the S&P MidCap 400. So this is going to be mainly mid-cap companies that probably demonstrate a little bit stronger growth than just the large cap as far as expansion of their business and things like that. So they also need to have increased their total dividend share amount every year for at least 15 consecutive years. So like we saw last time, Noble has a 25-year requirement and they need to be in the S&P 500. So other than that, they're pretty much run the exact same index. So if you missed that Noble video, check that one out and you'll see basically it's the same, except it's just a different it's MidCap 400 instead of S&P 500. So let's do an overview real quick. That is the REGL ProShares MidCap 400, and we'll see as of the date of this recording, $73.88 a share, just over $1 billion in assets, 0.40 in net expense ratio, a little bit high. They're not showing the 30-day yield. We'll go down to that. FactSet has this as a B, and Morningstar only gives it a 2-star rating. Seems a little odd to me. I don't know about that, but we'll just keep going. So we'll go down here and look at the price to earnings. Pretty much a value fund with the price to earnings trailing 12 months of 16.67. Pretty good value considering that the S&P has about a 24 PE as of right now. So there we go. Distribution yield right now a little low at 2.5%, but when we look at the dividend growth, you'll be quite impressed. So let's look at the portfolio composition here, and I just missed it, and there it is. Let that load up, and here we go. So total index, total holdings 51. This is going to be an equal weighted index, but you know, some of them are going to have a little bit more weight than the others just because of price appreciation and things like that. So that's between their balancing or rebalancing, I should say. So 22% in the top 10, 78 in the bottom 40. So top 10 holdings, a lot of these you may not even recognize because you know a lot of attention is paid to the S&P 500. But New Skin Enterprises, Renaissancier Holdings, Essential Utilities, One Gas Incorporated, RPM International, Regal Rexnord, OGE Energy, National Fuel Gas, Flower Foods, and the Carlyle Companies. We'll see 100% of these companies are based in North America. And market cap Interesting that it's 68% in small cap and 32% in mid cap. No large cap, no micro caps. And Morningstar rates this as a small value fund. Sector exposure: financials 25%, utilities 22%, industrials 22%, materials at 12%, consumer staples at 8%, real estate at 3%, consumer discretionary at 3%, communication services at 2%. So interestingly, they don't have energy and they don't have info tech. What else are they missing? They're missing something else there, guys, and I'm like lost on it. Anyway, infotech probably not in the mid cap range, especially considering they do have a requirement of increasing dividends for 15 years. So there's not really going to be a ton of companies that fall into that. So like I said, we'll take a look at the dividend growth, and we'll use Seeking Alpha for that. And you'll see here they have it as a 2.5% yield. Dividend growth rate trailing 12 months, 22%. 3-year compounded annual growth rate of 19.5%. And dividend growth rate compounded annually, 25% compounded annual growth rate on the dividend. Pretty darn impressive. Consecutive years of dividend growth, 6 years, and consecutive years of dividend payments of 6 years. And that is about, how long this ETF has been around. So definitely don't have a 10-year CAGR just yet. Will they be able to keep that up? We don't know. But if 5 years is enough for your history, I would say yes. Let's take a look at the performance. Over here, we're going to use the ETFchannel.com. I've already got REGL typed in there, and we are going to compare it to Noble, its sister company, and we're going to compare it from the S&P 500 to the S&P 400 MidCap. 10,000 invested. We'll just go max time because REGL hasn't been around that long. So we'll let that calculate. And here we'll see Noble definitely won out. They didn't win out in growth rate of the dividend, though, because REGL probably has double the dividend growth rate that Noble has. But average annual total return, respectable 11% since 2015, total return of 108.72%. So there you have REGL. Good overview. Excellent ETF that really, if you're looking for dividend focus and dividend growth especially, probably one you need to take a look at. Hope you guys enjoyed. That's REGL from ProShares. 15 years of dividend increases and decent, solid ETF for growth for sure. Hope you enjoy. Leave me a comment down below. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.